Very good evening to all of you. So today we are going to learn financial terms part 2. Okay. Part 1 of the financial terms I have already uploaded, but there was voice problem was there. You all know that. I will record it once again. No need to worry about it. I got a new software somehow. So I'm trying this particular software with the part 2 of the financial terms. If it goes well, I will record the part 1 of the financial terms. Why I have not removed that particular part 1 means there are some students are there who can easily at least gather the information with regard to that terminology. That's why I have not removed that particular video from my channel, so that those aspirants were able to understand just by reading the particular slides, so they will get benefited. Okay, so now let us see the financial terms part 2. Part 2 of the financial terms we are going to see. The financial terminologies are very important for all the major to minor, all the higher to low category examination. So very important for UPSC, State Public Service Commission of respective states, banking examinations, RBI examinations, SEBI, Staff Selection Commission, SSC, CGL, and all such other examination. This financial terminology is very important. Okay, all such examinations which are having syllabus which are having economy or banking in their syllabus. Okay, lesson is presented by me, Sayyid Shujatullah. So let us see the terminology, the first terminology in part 2. So we are going to discuss here about the definition of appropriation bill. Definition of appropriation bill. So what do you understand by this term, appropriation bill? If you divide this word to understand it in very simple way, what you have to do is you have to divide this word. Appropriation bill is nothing but approve bill. So government, the ruling party, generally makes lot of expenditures with regard to various developmental activities, with regard to various schemes, right or wrong? Right. So if they want to do some expenditure, they should get some money, right? Without money, how can they do some expenditure? How can they disburse the loan amount to the backward section of society? How can they start laying the roads, give the contracts to some other company, etc.? So to make any expenditure, you need to have some income. For government, you all know that the income is what? All the income will be collected. There are various forms of income to the government, is direct, indirect taxes, many are there, but I am not going into the detail. So whatever the income the government gets, generally it is kept into one particular account of it, which is called as Consolidated Fund of India. Okay, we also get income, right? So I do a job, I get a salary, and that salary is placed into my savings account, right or wrong? A businessman is there, if he gets some profit and he will place his income in his current account, right or wrong? In the same way, government is also getting some income and it is placing its income in one account, which is called as Consolidated Fund of India. And whatever the government generally do any expenditure, they will take out money from it and they will do the expenditure. Okay, suppose the BJP government is there in the center, not suppose, it is already there in the center. So they will every year they will make some annual plans. They will say that we are starting this particular scheme. They may say that we are giving 4,000 rupees per hectare to each and every farmer. They may say that we are giving 1,500 pension to each and every poorest of poor sections of the society, like that. So in order to disburse this amount, so all the whatever the various expenditures they already thought, they already planned, will be written in a piece of paper, just like A4 size paper will be there. Here every 1, 2, 3, all the expenditures will be written. This is nothing but this is called as bill. This is called as bill, and this bill, after writing everything, they will give to the speaker. Speaker will put in front of everyone, and the bill will be approved. Okay, that is called as what? Appropriation bill. More political aspects will be there. I'm not going into that discussion. Okay, so generally we have to learn these terminologies. We have to learn some features and aspect. That is only my intention. Appropriation bill gives the power to the government to withdraw funds for the consolidated from the consolidated fund of India for meeting the expenditure during that financial year. During that financial year, post the discussion on the budget proposals and the voting on demand for grants. Grants are nothing but which are given in free. So a state may say that give us 500 crores extra rupees, okay, because we are very poor. So that is called as what some states are demanding for free of money from the government. That is called as what demand. They are demanding some grants. Okay, don't collect any interest from us, just give it as free. So which state demand should be fulfilled in the form of grants? That on that also voting will happen in the parliament. On that also voting will happen in the parliament. Remember this. So after the discussion of the budget proposal and voting on demand for the grants, the government introduces what? What will be there in the budget here? In the budget, the same things will be there. Okay, expenditures for government expenditures will be there in the budget, along with what kind of how much amount of money they have with them. Everything will be there. Generally, budget is nothing but various expenditures of the government in that financial year. So after the discussion of the budget is over, demand for grants is also over, the government introduces the appropriation bill. So we are having these many expenditure. Please approve it in the Lok Sabha. In the Lok Sabha. Fine. It is intended to give authority to the government to withdraw from the consolidated fund. That is what I have told you. Once the bill is approved by the Lok Sabha, then what happens? It will give the government, okay, the ruling government, the present government, the authentication so that they can take money from the consolidated fund of India. Okay, how much of amount of money is voted, that much of expenditure they can do. Remember this. The amount so voted for meeting the expenditure during the financial year could be withdrawn from the consolidated fund of India. Fine. So this is one terminology that we have learned today. Let us see the another important terminology. Definition of arbitrage fund. Definition of arbitrage fund. Okay. It's very easy. If you just read the definition, you can easily find out. Arbitrage fund is a type of mutual fund. Mutual fund means you, me, your friend, my friend, okay, your relative, my relative, all of us gave 100 rupees and put in one box. Okay, that is called as mutual fund. Everyone, okay, mutual, why it is saying mutual fund means everybody agreed that whatever we are contributing with this money, we are going to start one particular thing, one particular company or one particular manufacturing or service unit or one particular business. Mutually agreed, okay, to spend on one particular aspect, one particular business. That's why it is called as mutual fund. Okay, many people will be there. Arbitrage fund is a type of mutual fund that leverages, means that derives the price differential in cash and the derivatives market to generate returns. Okay, price differential in cash and derivatives market to generate returns. The returns are dependent on the volatility of the asset. Okay, the returns are dependent on volatility of the asset. So whatever you, me and everyone, we are all agreed and we invested this particular mutual fund of us into some business, and this business is very volatile, depends on the asset. Okay, suppose you might be invested in the share market, so your credit risk factor will be more. Here risk is more because you may get less return or low high return, you don't know it. Suppose if you have invested in government bond, it is very secure one. So whatever the returns on your mutual fund you may get, they are all depend on what? Depend on the volatility of the assets. Generally, government assets, government bonds, government shares, whatever the government issues, treasury bills, all of them are safe. They are considered as what? Safe asset. Whereas rest, and also the big companies such as Wipro is there, Infosys is there, okay, NMDC, NTPC, whatever the various big companies are there which are having market value is there, which are credible, okay, that kind of assets are also safe. Whereas all other or not may not be considered as what risk-free assets. So whatever the returns are, whatever the returns you are getting, they are all dependent on the volatility of the assets. Very common. These funds are hybrid in nature. Hybrid in nature means mix of two, three things. Okay, it's not the same kind of fund, that same kind of business we have invested. The funds can be of hybrid type, means the same fund could be invested in agriculture also, the same fund could be invested in industry and also service. So these funds are hybrid in nature. Okay, as they have the provision of investing a sizable portion of portfolio in the debt markets. Debt market means, okay, debt market means the market where you have invested and the other person is debted to you. Okay, debted to you. All these debt market, financial markets are nothing but they are the kind or means of raising money. They are the kind or means of raising the money. Okay, there is a difference between this debt market and share market is, in case of debt market, whatever the return is there on your fund, it is sure you will definitely get it. Whereas in case of share market, you will not know whether you will get the profit or not. That is the difference. So many of the mutual funds are generally what placed, okay, in the portfolio of debt markets. When you are assured of your profits, okay, then such kind of markets can be considered as what debt markets. Okay, arbitrage funds are the panacea for low risk taking investors. Means panacea means it's a remedy. Okay, so if you are having, suppose you are having very less income, like 10,000 rupees or 20,000 rupees are there, you want to invest your 2,000 rupees in one business. So generally you invest in those businesses which you feel very secure and which you feel that definitely you will get the return. So arbitrage funds are those funds arbitrage funds are those funds which are generally directed people like you who want to take very less risk. Okay, that's why they are called as panacea for the low risk taking investor. In a situation of high and persistent volatility, arbitrage funds provide investors a safe avenue, means safe opportunity to park their hard-earned money. These funds capitalize on the market inefficiencies and generate profits for the investors. Remember this. Whenever there is market inefficient is there, okay, they will take the advantage of that particular market and try to generate what profits for the investors. Okay, as these funds invest predominantly in equities, their tax treatment is at par with equity funds. This is added what point that you should remember it. Okay, then very important word that I am going to discuss now, that is bank rate. You all know that what is bank rate. It is one of the tool of, I think it's a quantitative tool of RBI to regulate the volume of money in the market or in the hands of the people, you can say. In your hand you are having 10,000 rupees at present. If RBI do any changes in the bank rate, it may happen that you may get 20,000 or you may get 5,000. Depends how much amount of money should be, how much volume of money should be circulating in the economy or circulating in the country, that can be changed with the help of what bank rate. So let us see what is a bank rate. Okay, remember this bank rate, with the term only you have to understand. It is something related with the banking sector. Bank rate is the rate. Bank rate is the rate charged by the central bank, which is RBI, for us for lending funds to commercial banks. Those who operate for profits, they are called as what? Commercial banks. The banks which operate for profit motive, they are called as commercial banks. The banks which don't operate, okay, with the motive of earning profits, they are called as non-commercial banks. If I say one of that example, cooperative banks, regional rural banks, these are the examples of those banks which are generally or they don't operate on profit motive basis. If it is break even, like no loss no profit also, they don't mind it. Okay, but generally in bank rate, okay, it is a rate, means it is a rate means you have to understand this word. It is the interest rate. It is the interest rate charged by the central bank for lending funds to the commercial bank. Bank rate influences lending rates of commercial bank. Remember all of these things, you have to remember. Higher bank rate will translate to higher lending rates by the banks. Okay. Higher bank rate will translate to higher lending rates by the banks. Suppose let us assume an example here. You are a bank. You are a bank. At present, you don't have any money. There are like 10 applications are there. Those who are wanting loan. Those who are wanting loan. So remember this point again. You are a bank and you don't have money. Okay. And there are 10 applications in front of you which are credible applications. Okay, which are safe applications. Safe, whatever 10 employees are there who wanted a loan from your bank, and you want to give them loan because they are very safe. Maybe government employees, maybe private IT employees, maybe doctors, etc. So where you should go, because banks are not allowed to sell their shares, right or wrong. So you cannot give you a part of your bank into the public and raise money from the public. You cannot do that because that is a rule there. Okay, so you have to, okay, anyhow arrange money. Somehow you have to arrange money to give that money in the form of loans to the 10 applications. So I am the RBI. So what do? You will ask me, sir, if you have some money, I want this much of money, please lend me. Please lend me. If I increase it, suppose if I say that 10% interest rate, okay, then you have to give me 10% interest. For your profit, what you will do? You will give them a 12% interest rate, right or wrong? Before whatever the 12% interest rate, whatever you are giving at present, in the last month what you did is you gave the interest loan at the interest rate of 6% only. Suddenly what happened? You don't have the money, you asked me, and RBI wanted to control many other things such as inflation. I don't go into that things, just remember it like this. So if I give you on more interest rate, what will happen? You will also lend that money as loans to the 10 application on more interest rate, right or wrong? If I give you a loan on less interest rate, you will also lend on less interest rate. So if you are putting high interest rate, does out of the 10 application, 5 application will go off. 5 application will go off. Why? Because they feel that the interest rate is very higher. In near future it may decrease, then I will take it. This is what it is said here only. It's very common, it happens. You may not have any, never you have ever come across this situation maybe in your lifetime. Maybe many of you are students as of now, but when you start earning, when you are going for any raising of any home loan or any personal loan, then you will realize. Okay, so on the interest, how it plays a very important role. So bank rate influences lending rate of the commercial bank. Higher bank rate will translate to higher lending rates, which is what I have told you. In order to curb liquidity, means in order to squeeze out the amount of money in the economy, the central bank can resort to raising the bank rate and vice versa. Whenever the RBI want that too much money is there in the country, so let us take some money out of in the hands of the people. So as I've told you that out of 10 applications, 5 applications will be demotivated because they are not finding the interest rate very favorable to them. So what they will go. So what RBI does actually, just by changing the bank rate, it is able to send off 5 applications out of 10. Okay, so every 10 applications, 5 are not taking, means the 5, whatever those who are not getting the loans now, they will have less money with them. So this is how the RBI plays all the things. Okay. Another important definition that we are going to see today, very important, bailout. Bail us out. Bail, you know that somebody is in the jail. What you have to do? You have to take him out. So bail out. Somebody, it means what? A country or region or a state or a business unit such as Kingfisher is there. It is all okay. It is totally collapsed and it has borrowed lots of money from different banks and raised lots of money from the public also. It did not make much profit. Maybe any of the reasons will be there. What happened? It totally collapsed and unable to sustain itself okay, then what happens generally? They will ask to the government, please sir, bail out, means to put them out of the jail, like that. Let us see them in the financial terminology understanding. Bailout is a general term for extending financial support to a company or a country facing a potential bankruptcy threat. Means just like Vijay Mallya, if you remember, your bailout problem will be, the definition will be easily to understand. Okay, if any business unit is bankrupt, means it's unable to pay the debts, is unable to repay the principal or the interest amount to the bank, such kind of banks or such kind of businesses are generally considered as what? Bankrupted. So if any company or a country is facing potential bankruptcy threat, they generally ask the government to extend them some financial support. It is very much debated because government, if government gives even 1 rupee to any one of the company, it means any one of the organization. What does it means? It government is giving our money. Government is giving a public money to those big shots. Okay, so that generally don't happen in case of India also. Bailout is a general term for extending financial support to a company or a country facing a potential bankruptcy threat. Remember this point. It can take the form of loans, cash, bonds, or stock purchases. As I told you that they have raised many, much of the money, the company has raised much of the money from banks, from bonds, etc., but unable to repay profit to any of their investors or shareholders, or even unable to pay the money, interest money or principal amount to the bank. In such kind of what situation is called as bankrupt. Okay, a bailout or a bailout may or may not require reimbursement and is often accompanied by greater government oversight and regulation. Okay, so these kind of businesses are generally, okay, government will always have a closer sight on these businesses, because if they are getting away from the market, many of the jobs will be at the stake. That is another important implication of those big companies which are going for what? Bankruptcy. Okay. So such companies, such organizations, okay, such countries are under generally direct government regulations. The reason for bailout is to support an industry that may be affecting millions of people internationally or nationally, you can say, or could be on the verge of bankruptcy due to prolonged financial crisis. Whatever I have told you just now, it is the same here. Okay, bailout policies come in various forms. Okay, so this is very important. Whenever you are giving any financial assistance to any company which is what bankrupted, which is having what about to go in any financial crisis. Financial crisis means the company is unable to pay the salaries to the employees. The company is unable to carry out its administration, etc. You can say that company is going under financial crisis. If it is if it is happening for a long time, then company definitely have to look for other sources of our money. Already the company has bought from the banks. Already company has what raised the money by giving shares, bonds, etc. Now there is nobody is there to help out. Now the company went to what? Government. Sir, you please support us. Okay, bailout policies generally comes in variety of forms. Okay, the most common being direct loans or guarantees of third party loans to the rescued entity. Direct loans will be given to that company, or a guarantee of third party means another, okay, loan will be given when another person is like just like a surety. When you are going to take a loan, generally also in your personal life, the bank will ask you a surety, so you will put your father's signature or your brother's signature. That is called as third party. Third party guarantees will be there. At a time the government will give some loans, or any organization will lend any loan. These direct loans are often on terms favoring the entity being rescued. Whatever the loans are given, again they are favoring to the a rescued entity. Okay, means less interest rate will be there on such loans. Sometimes even direct subsidies are also provided to the parties concerned. For UPSC aspirants, you should know that bailout not only includes what direct loans, you can say that reasonable interest loans directly given to that companies, or guarantees by the third parties, or you can say that such companies will be given what direct subsidies in the form of what, don't pay the excise duty for 5 years. Okay, so you don't have to pay this tax, that tax. Those are called what direct subsidies, or you can say that tax exemptions also, you can say. Such companies will be also given some benefit through the subsidies also. Okay, stock purchases are also not uncommon. Okay, so this also point you remember it. Sorry. So the government or the financing body places strict requirements such as restructuring of the organization. So whenever the government bail out any company, okay, give some money to again revive its health. Sorry, revive its health. So government at that time doesn't want to take another risk. So what generally they do is they advise and put lots of strict restrictions and rules, okay, to restructure the total organization. The way it is carrying out the activities of the businesses, that should be restructured. Means again look look them again and see that any changes could be made, so that again that kind of crisis should not come. No dividend payment to the shareholders, they will stop it. Change of management if required, that is also very common. And in some cases, a cap on the salaries of the executives till a stipulated period of time. And government may also say that, okay, CEO should not be given more than 2 lakhs, manager should not be given more than 1 lakh. So a cap on the salaries, upper limit on the salaries could be what could be put by the government till a stipulated period of time. Means of course whenever it start earning profits, then you can increase this, not a problem. Okay, or repayment of dues. Okay, any dues are there to the employees, later on we will see about it, but today at this point of time we will not pay any dues like that. This may also be followed by a temporary relaxation of the rules that may impact the accounts of rescued entity. Some rules are there, so they can put some strict requirements, okay, in the form of all these things, or they can give some relaxation of rules to these entities also. Bailouts has several advantages. Of course, if government is doing everything, or government is giving you subsidies, government is giving you loans, everything, of course it is advantages to all the companies who are taking assistance from the government. Firstly, they ensure continued survival of the entity. Very common. It is about to collapse. Its name is about to get vanished, but still it survived. That is the biggest benefit. Okay, it ensured the continuation of the entity, whatever the rescued entity, under difficult economic circumstances. This is one. Secondly, a complete collapse of the financial system can be avoided. If it is a very big company, then complete collapse will happen to this total financial environment of the country also. When industry is too big to fail, to start, to crumble. Okay, this is a quote generally. The government in these cases steps in to avoid the insolvency of institution. Of course, again the same bankruptcy problem should not come. So government in these cases, what they will do, they'll take lot of measures, lot of steps, lot of initiatives, so that such insolvency problem should not arise again. Okay, and whatever is required for the smooth functioning of the overall market, that will be also, okay, look after by the government. This is our last slide. Let us see that. Bailouts also have got some disadvantages. Bailouts also have got some disadvantages. I have given this because recently this particular bailout thing will also occur with respect to Greece country and Kingfisher also. So many this is a very common scenario in the modern economic system. So for UPSC aspirants, it plays a very important role that you should know many of the things in deeper. Okay, that's why I have given this in length. Bailouts also have their disadvantages. Okay, anticipated bailouts encourage a moral hazard by allowing not only the promoters but also stakeholders to take higher than the recommended risk in financial transaction. It's very common that Okay, when you are sure that government in one or the other way is going to help you in when you are about to collapse, so what you will do is you will take more and more risk. If you fall, the government is going to help you. If you don't fall, you will earn more profit. Okay, so it's just a moral hazard. We are with the help with the bailouts. Okay, by giving bailouts, if government start giving the bailouts, it will be a moral hazard on the promoters. Okay, they may start taking what more and more risk also. This happens because they start counting on a bailout when things go wrong. The moment they are able to feel that they may not survive in near future, they start thinking what a bailout will happen from the government, like that. That kind of perception will build up in the total administrative system of the company, and it will lead to what a moral hazard. Thank you guys for hearing me. Have a nice day. Good night. I hope that you're liking it. Please share it as much as possible. Have a good day.